If you're watching the agricultural markets right now, you know they're caught in this epic tug of war. You've got a mountain of supply on one side, and on the other, you've got this incredibly strong consumer. These two forces are just pulling in completely opposite directions, and it's creating a ton of volatility. So, we're going to break down what this means for everything from corn to cattle. Let's get into it. So, I think the question on everyone's mind is pretty simple. Why are things so choppy? I mean, you look at the charts and you see what traders call range-bound trading. Prices are basically just stuck, bouncing between a ceiling and a floor. And you can feel this sort of risk-offish mood in the air. That just means traders are getting antsy. They're not making any big bets, and nobody's really willing to make a bold move one way or the other. And at the core of all this, you've got two totally different stories fighting it out. On one side, you've got the bears. They're looking at what they call a wall of worry, which is really just record supply and some seriously shaky demand. But on the other side, you've got the bulls. They're seeing a really weak dollar and a super strong American consumer providing some serious support. And these two competing narratives, well, they're the reason we're in this stalemate. Okay, so let's dig into the bear case first, that big old wall of worry. And listen, this isn't just one thing. It's a whole collection of issues that are really weighing down prices, especially when you look at greens. First up, the biggest issue is just the sheer amount of supply out there. We're talking a mountain of it. The U.S. is staring down the barrel of a potential record soybean yield and a corn crop that's a whole 5 bushels per acre above the last record. And it's not just us. Our neighbors up north in Canada are seeing huge crops too. Their biggest wheat and canola numbers in years. So naturally, traders are all asking the same very stressful question. Where in the world is all this crop going to go? And that question gets even tougher to answer when you look at the demand side, which feels more like a vacuum. You know, the elephant in the room here is China. They're the #1 buyer of U.S. soybeans, so what they do is a huge deal. Well, right now, they've bought zero. That's right, a big fat zero for this marketing year. We haven't seen a start this awful since the trade war back in 2019. Now, other countries are stepping up, sure, but they just can't fill a China-sized hole. And just to put a number on that, to really show you the scale of this problem, look at this. 825 million. That's how many bushels of soybeans were supposed to go to China that are just gone. They're missing from the market. This isn't some tiny gap we're talking about. It's a massive hole in our export pipeline, and it's really messing with traders' heads. And, to top it all off, you've got policy paralysis coming out of Washington. The biofuel industry is a huge domestic customer for corn and soybeans. But the EPA just dropped a new proposal for blending rules that's created way more confusion than clarity. Now it's out for public comment, and you can bet the final decision will get tied up in court. That means this uncertainty could drag on for months, maybe even years, basically hitting the pause button on a key source of demand. Okay, so after all that bearish news, you probably think prices would be in a total freefall, right? But here's the thing. They're not. And that's because there's a really powerful bull case that's basically putting a floor under this market. So what exactly is holding everything up? Well, the biggest thing propping up the bull case, especially for grains, is the weaker US dollar. It's a pretty simple idea, really. When our dollar's value drops, it's like we're putting a giant for sale sign on American corn, soybeans, and wheat for the entire world to see. It just makes our stuff a whole lot cheaper and more competitive. And this isn't just some economic theory. It's actually happening right now. The Federal Reserve just recently cut interest rates. That one move helped push the dollar down to its lowest point in months, which is a huge tailwind for the market. It instantly makes U.S. farm goods look a lot more attractive to buyers overseas. Now let's pivot over to livestock for a minute, because the bull case there is a completely different story. It really comes down to one thing: the American consumer. As one analyst put it so well, so long as the American consumer, their penchant remains high for beef, I think we'll continue to see higher prices. It really is that simple. The fundamentals for cattle are just rock solid. And when you look at those fundamentals, they really are strong. First off, the actual supply of cattle in the U.S. is historically tight, and it's probably going to stay that way for another year or two. Second, even with higher prices at the store, wholesale beef prices are holding up, which tells you people are still buying. And finally, the cash market, what people are actually paying for cattle out in the real world, is way higher than the futures market. That is a huge sign of real honest-to-goodness demand. So there you have it. You've got the bears pulling on one end of the rope with their mountain of supply and this vacuum of demand. And on the other end, you've got the bulls digging their heels in with a weak dollar and a super strong consumer. Both sides are pulling as hard as they can, and neither one is giving an inch. And the result? This choppy, sideways market we're all stuck in.
And you can see this tug of war playing out in every single part of the market. I mean, take the US harvest. Yes, it's a huge bearish glut of supply, but the bulls will tell you that big crop is already priced in. Or China. Their absence is incredibly bearish, but the hope for a new trade deal keeps a little bullish optimism alive. It's the same story for the dollar and the consumer. Every single driver has two sides, just pulling against each other.
All right, so this stalemate can't last forever. I mean, something's got to give, right? So what's the deciding factor going to be? What could finally break this deadlock and give one side the win? Well, it really all comes down to three outside players, and the market can't control what they do. First, you've got the U.S. Federal Reserve. Whatever they do with interest rates is going to decide where the dollar goes. Second, there's China. A real breakthrough in trade talks could bring them roaring back into the market literally overnight. And third, the U.S. EPA. If they could just provide some clarity on biofuel rules, it could unlock a huge wave of demand right here at home. So really, here's the bottom line. The market is just stuck in a holding pattern. It's just waiting. It's waiting for a clear signal from one of those players to tell it which direction to go. And until one of those big questions gets a firm answer, you can probably expect a lot more of this choppy sideways action. And that leaves all of us with the one final question. You've got the incredible weight of a record harvest pushing prices down, but you've also got the powerful lift of a cheap dollar and a strong consumer pulling them right back up. So which side is stronger? Which side is finally going to win this great market tug of war? Well, that's what every single trader is trying to figure out right now.